Systemic thinking is the highest form of thinking. My guest today, Charlie Morris, founder of ByteTree, is very systemic. He blends traditional bonds and equities with alternative assets such as gold, commodities, and crypto. If you're blending, Charlie, welcome.
Great to be here, James.
So we'll talk about a few specific investments you like and something you think people should avoid. But first, let's do a little lightning round, very casual. What did you want to be when you were growing up?
I think I wanted to be a brain surgeon, but then I wasn't clever enough.
The trade of piling into European defense stocks, room to run or overdone?
Well, it's a great momentum trade, but I think it's gone way past the fundamentals.
Copper as a leading indicator, still good?
Very good. Dr. Copper broke out yesterday.
What do you think the most underappreciated asset class is?
One is bonds, and for good reason. But the other one, I would say that the crypto industry is pretty hated at the moment, which will surprise some people. Bitcoin's done well. But then the other interesting thing that's happening in markets is best companies in the world are all going down. The big brands, the beverage companies, they're not doing very well. Some people say it's because the young people don't drink alcohol, but these stocks are really down. And the luxury goods stocks as well, heavily discounted. And also increasingly we're starting to see the US giant blue chip stocks like Pepsi Cola and Heinz and Estee Lauder have been falling for the last year or two, or certainly lagging the market significantly. Or just the fizzy drinks and stuff like that. And these Procter Gamble type firms, their stocks have not been doing well in the last couple of years. In a bull market, these big safe stocks underperform. That's quite normal. Pharmaceuticals, there's been some policy changes in the US, which has been difficult. But all in all, I just think that these big brands have had, 25 years of extraordinary gains, high valuations, they're now coming down. Where I think it ends is when this bull market peaks, whenever that is, you buy those stocks.
If you're speaking about the U.S. market, you think we're in for a flat decade? Or are we near peak? Do we have more room to run?
I think U.S. equities are not as well as gold, but they've done extraordinarily well. And valuations are high. We're starting to see the rollover in some of these big stocks. The tech sector is still holding everything up. But I think the rest of each of the world offers better opportunity because the world index is 2/3 American, 1/3 rest of the world. Whenever that stream happens, then you just know the other side's got opportunity. For the next 10 years, UK, Europe, Asia and Japan, Australia, South Africa, they're just cheap markets. There's nothing bubbly about them. And so I think they'll be fine. And I do think the US market has been overly pumped.
I have been automatically investing into some emerging markets ETF, and I've been hating it for the past 5 years or so, but the dollar is at or near a 3-year low. Do you think I should keep buying those emerging markets funds?
It doesn't matter if you're American or not American. A falling dollar affects us all, and it impacts the shape of market. If you're a foreigner owning US stocks, you're actually, in euros or pounds, it's down. And this is just the other way around of how it's been for the last 5 years. The dollar has been quite strong. So for you to own the rest of the world from America, you've got an easy 10% just on that dollar's fall. Now, if that stock market starts to go up as well, then you've got a bit of a tailwind. And the last time we saw this was 2001 to 2008, where the S&P had been huge in 1999, 2000. The next 7-8 years, it was the rest of the world that did well. Emerging markets were amazing.
Yeah, you got all these headline stories about emerging markets going to come back. It really, at least to me, boiled down to the strength of the dollar. When the dollar has been weak, emerging markets have done better. The dollar is strong, emerging markets are typically not. Is that the main driver?
I think that's the large part of it. And why does the dollar go up? Money's going into America, and it's been going in for years. That's probably peaked. Now it comes back to the rest of the world. It doesn't take much to move a small stock market, in Indonesia or Thailand. And that's why I think we're seeing so much strength in the rest of the world. The German market has been another interesting one because they're basically acknowledged they've gone too far on deindustrialization. Mario Draghi wrote a report a year ago saying that, we've all gone too far on this stuff. The tide is turning, and that's long-term going to be positive.
You mentioned crypto being underappreciated. Sounds like you think there's a ton of room to run. Is that true?
So let me clarify. There's Bitcoin and there's crypto, and I understand how some people could lump them together. Bitcoin's had a good run at these last 2.5 years. The US ETF launches last January. Trump has been very helpful as well. But here in the UK, crypto ETFs have been banned since 2020. They've just announced that they're going to unwind the ban. In the autumn, we will see crypto ETFs trading in London again. London, so what? A lot of the banks around the world do have HQs in London, and so this policy will spread. UBS in Zurich won't take orders for Bitcoin ETFs, even though it's outside of the London system, is connected to London. You've got a ban in Singapore, India, Japan, Thailand, and many of these sort of small countries. And then in the bigger countries in Europe and so on, there's uncertainty. And so the institutional investor is not really playing. Even in the United States, traditional wealth management firm, far less likely to allocate Bitcoin to a client portfolio than they are in one of the smaller mom and pop shops. And that tide will change. Bitcoin has got some good years ahead. The global institutional investor has barely any exposure to Bitcoin whatsoever. So the rest of crypto, most of them are worthless. But there are a few that are very powerful platforms that are going to drive things like stable coins and central bank digital currencies and many of the different innovations that are coming out of that sector. So what do I really like? I like commodities, I like rest of world equities, and I like crypto. I think if you balance those, then you'll do well.
Do we need more than like 20?
There's probably about 20 that are investable.
Any names you can give somebody who's interested in expanding beyond Bitcoin?
Yeah, so you've got things like Tron that's going to be listed in the US soon. But then you've got the platforms like Ethereum, Solana, and it's all about decentralization and communities. How can you monetize a community? And tokenization is interesting for that. NFTs, which at the moment people think about as the art world, but the technology is very powerful. They can be used in many different applications and contract law and so forth. I have absolutely zero doubt that crypto is here to stay, and it's not going anywhere. It's just maturing. Every year it gets a bit more grown up. Web3 is all about decentralizing the internet. If you think about gold and commodities being real world, and most of the companies in Asia and Europe being real world businesses, this is very much next gen of where the internet's going.
3 years ago, you brought an ETF to the market, Gold, which fuses Bitcoin and gold. My question is, gold is, roughly at your all-time highs. You've been pounding the table on gold for years. What do you think of gold as an investment now?
It's had a hell of a run. It's over $1,000 in 2015, $250 at the beginning of the century, and it's now $3,300. It's a big gain. It's beaten the S&P, including dividends, this century. It did start from a low base, so that's a bit cheeky. But it has behaved like a monetary asset that's gone up with the money supply. As has the S&P. It's done better than the rest of the commodity space. The big change recently, particularly since the war in Ukraine, has been central banks increasing their reserves. And now they've got fewer dollars, fewer euros, and gold is in number 2 place. Central bank reserve baskets are at 20% on gold. Take you back to the gold standard days, it was 60%. So the central banks have got stronger balance sheets. They're not getting rid of all government bonds, but they're increasing the weight in gold. That's a sort of healthy development. Should you buy gold today? I doubt it's got a huge upside now. It's okay. It's not going to crash anytime soon. What would make gold crash would be a big spike in real interest rates. Real interest rates are the bond yield and the expected inflation. And because long-term inflation expectations are still contained and the bond yield's pretty high, we've got the highest real yields we've ever had in the 30 years. So if they go up from here, that would be a bit odd. They're much more likely to come down from here. And if that happens, gold's got a lot of upside. For gold to have a lot of downside, you need to see real interest rates spike from already very high levels.
Which is hard to see. And you mentioned bonds right at the start. It sounds like you are expecting rates to come down. If somebody says, all right, where should I start in bonds? What would your answer be?
There's a tricky one here. If everything was fine and we didn't have too much debt in the world, there's not a lot of demand for the long end of the bond market. Normally, those are the ones that are going to go up the most when you get rate cuts. In the good old days, when everyone said the government finances were sound, they're not. So I don't think the long bond yield has to come down at a rapid pace. If it does, that would just benefit gold. So you've got to go halfway. Obviously, you're not going to get much benefit of rate cuts if you're 2 or 4 years. So you want to own treasuries probably at the 5 to 10 year space, and you do get a little bit of a pickup. Should rates start coming down. But it's very unlikely you're going to go all the way down to where they came from. So we're not talking about big gains here. We're talking about pretty modest gains, not a lot of risk and a reasonable pickup. Better than holding cash.
So you like Tron and some of these alternative cryptos, bonds, gold, but it's probably pretty well priced at this point. Consumer brands, the tried and true bread and butter type equities like a Diageo or a Procter Gamble, companies that have traditionally been strong but just are not as sexy right now.
So to clarify on those big brands, I think they're going down, but they will be attractive. Investors are backing out of those because they are generally overpriced. And luxury goods, for example, they go up because China's printing millionaires and you will go buy new outlets, right? If the world's not printing as many millionaires at the rate it was, then that's bad for the luxury goods company.
Anything that you think that people should avoid, especially something that seems popular to the mainstream investor?
Big tech. Those companies are amazing, but I just don't understand the valuations at all. They make no sense. They really are pumped to the sky. Microsoft got a free cash flow yield of something like 1%. And the growth rate, we're dealing with sort of 5, 6, 7% growth for a very, very high PE. And this is true right across those big names. If you go to Korea, you can buy SK Hynix, the second biggest stock in Korea, chip business, on 6 times earnings.
Wow.
And the stock has made all-time highs. Samsung, SK, Taiwan Semi, these offer much better value than the similar company in the USA. SK Hynix is not listed in the USA, which is one of the reasons why it's cheap. I think that the world's equity investors have just become lazy. They've just opened up the US market every day and ignored the other thing. And when it goes too far, it's the other thing that's got the opportunities. There's plenty of reasonably priced good companies around the world, and there's nothing wrong with them, which is not the same thing as saying they're going to the moon.
Avoid the Magnificent Seven, it sounds like.
I think so. I've been wrong since 20 saying that these stocks are very highly valued, but we've had older gold mining shares, Bitcoin, and other things which have done very well. So it hasn't cost us any money in our portfolios. With hindsight, of course, I wish the end of 22 to 22, I just bought the NASDAQ. But I did.
One last question. What about commodities? Generally bullish, bearish, neutral?
The metals are great. Gold's led the charge last few years, but it's silver time now. We're seeing PGMs, platinum, palladium, on the move. Platinum's short-term overbought, but palladium is starting to do something interesting. I'm a big silver bug. I think silver's going to 100. And then copper. Copper and base metals look strong. They're a hard asset. They've cooled down since 2022. But the energy sphere is just very weak. You just wonder what's going to change oil. Some of the evidence coming out of China is the EV growth is so big that has really dampened their demand for oil. Oil demand growth year on year continues to grow. But if the signal from China is that EVs do quash demand, that will eventually spread. And they come out of China so cheaply now. So Xiaomi, the Chinese company that makes phones, produced their first SUV to compete directly with Tesla, and their car is $35,000. Even though I'm an oil bull because it's so cheap, I'm starting to ask the questions about, is it going to stay cheap? Like natural gas has. Natural gas has been cheap since 2006, hasn't it?
Yeah, we see change in personal transportation. Consumers now drive around on motorbikes, but will their first car be an EV? It's looking more and more like that. It sounds like you like commodities, like crypto, like mid-duration treasuries. Some of those stocks should be on your radar. They're not quite cheap enough yet. You're avoiding tech. I do take issue with one thing you said. I do think you would have been a good brain surgeon. You can do a lot of things well, Charlie. If someone says, I want more Charlie Moores, where would you send this person?
ByteTree.com, it says ByteTree behind us, and on Twitter at Atlas, as in map, Atlas, Pulse, as in blood.
Charlie Morris, thanks so much for sharing your wisdom today, and thanks to you guys for watching us at home.
Thank you, James.